Welcome back to Daniel's Stock Bites. Here on this channel we do quick 2 to 5 minute videos. However, this one's going to be a little bit longer because I have 7 stocks to talk about, but typically they're 2 to 5 minutes on high growth tech stocks. In all of these stocks, I'll be talking a little bit about the business, not too much, but we're going to go right into the charts and why I'm watching them based on some technical analysis. I know I've been away for a little bit while on this channel and I've just been busy with moving and just setting up this new house, but now that I'm settled in, hopefully I'll be releasing more content, so smash that subscribe button if you're new here, and if you're not new here, leave a like down below to help support my channel out. Anyways, let's move on to today's subject, the 7 stocks that I'm watching on the US exchange right now. The first stock on this list is Jmia, and there's 2 reasons as to why I'm looking at Jmia. First off, they have huge plans for their business, which is essentially to become the Amazon of Africa. And secondly, they've had some pretty good price movement in their charts. So if we look at the charts, we can see that Jmia was actually quite a beat down stock. And if we go back in the price history, they were trading at about $2 earlier in 2020, basically when the whole pandemic hit. And since then, they rallied to a price of around $50 per share. When I started taking notice of Jmia, it was right around actually when they hit their previous all-time highs and dropped back down. And I saw that this retracement was probably a short-term thing and that eventually it would shoot back higher. So I actually entered into an options trade somewhere around this area here. It was a short-term options trade for the $45 price mark that's going to expire, I think it's in March or February. So I ended up buying into the options position right around here, thinking that this pullback was only temporarily and the stock would continue to rise up higher. And if we look at the charts here, obviously that ended up playing out. The reason why I'm showing you this here is not to toot my own horn, but to show you a concept that I just learned, the Fibonacci extension, which we'll be probably using quite a bit in this video. So you can see here the Fibonacci extension essentially is this 3-point line that I drew here from the low of the initial run up to the high point, and then it came back down and bounced here. And then all these percent lines that you see afterwards are the potential price targets that we could have for our trade. So right now we've crossed over the 38, the 50, and the 61% mark, which are the typical lines that you're looking for. The next one after that is 100%, and then beyond that we have the 160%. So right now I'm looking to possibly take profits at the 100% mark, and actually I don't know if I'll take profits there. I think I'll probably set a stop loss at the 78% mark once it hits the 100% mark, and if it doesn't hit that stop loss, I'll probably take profits at the 161 mark. So that's my plan for Jmia stock going forwards. Another stock that we're going to look at is Shopify. And the reason why I'm looking at Shopify is because of these 2 lines. So first of all, I love Shopify as a business and the stock is always expensive. But if we're looking for short-term trades or just entry points into the stock, I think right now might be a decent entry, although it's at all-time highs. And let me explain why. So I drew these 2 lines, which is one's a resistance line and one's a support line. So you can see that Shopify has been trading range bound for a couple months, which is, not really typical of Shopify, except for back in its earlier days, which if we scroll back, you can see here it was also trading range bound. And after it trades range bound for a while, it ends up spiking up quite dramatically. So we saw a huge run up here all the way to $400. Then we saw a bit of more range bound movement and then another spike up. And then I think this is where COVID hit right around here. And then a huge spike up since then. And ever since then, we've been range bound for a little while. And right now, the fact that we've just broken out, I think that Shopify is going to be reaching new highs. And I think they're probably going to hit maybe around $1,500 per share. Just looking at the previous price movements, we can see that they typically run up quite a bit after a period of consolidation. And the reason why I think that we're going to continue moving up is because of the strong volume right at the point when Shopify broke above this previous resistance line. So you can see that there was a large candle here, and there continues to be quite a bit of volume afterwards. Although not as much as back here when everyone was buying up Shopify as it was going on this bull run, but the reason why we might not have as much activity right now is because a lot of hedge funds are actually on Christmas break, so this is mostly retail traders right here. The next stock on this list here is Riot blockchain. And I just drew this Fibonacci extension here just to show you guys what's been happening. So you can see that after this upwards movement and then this retracement, Riot blockchain decided to go for a run all the way up to the 161% mark on this Fibonacci extension. I think that Riot blockchain, maybe wait for a pullback if you're looking to buy in right now. I personally wouldn't be buying in at these levels, But I think that over the next 3 to 6 months, Bitcoin is going to continue rising, and Riot blockchain is going to rise at a faster rate than Bitcoin just because they're a miner, and that's what they've been doing as Bitcoin continues to break out to new all-time highs. So personally, I have an options play on this company right now for the month of March, where the options are actually a $13 strike price. And right now, they're doing quite well for me because I bought in, I think I bought in on this day or this day here. So I got quite lucky with all this price action, but I think that there's still a lot more room for this stock to run. The next stock on this list is Root Insurance. And Root Insurance is kind of interesting to me because they're also playing in the same space as Lmnd. And if you guys have been watching Lmnd, you can see that Lemondade's been on quite a crazy uptrend after this whole period of downtrend here. And it's been quite a dramatic move upwards. So I think that Root Insurance may be on the same type of trajectory because people see Lmnd right now. InsurTech is hot because of Lmnd. And I think that Root Insurance could be riding off of Lemondade's success in the stock market, which we've seen in the past couple of days with these two huge movements upwards. However, these movements upwards are still quite below their IPO price. So I think that Root Insurance could be a stock for you guys to watch as it's not very highly covered by YouTubers right now. And if that ends up being the case where Root Insurance is becoming or having more of the spotlight, we'll probably see the stock come back to its IPO price and move beyond that. And I think that Root Insurance, the fact that they're in car insurance right now, which is a lot larger than pet insurance, and I think it's probably equivalent to home insurance. I'm not too sure on that, but car insurance is big. And the reason why Root probably sold off is because this whole pandemic and not as many people are driving right now. So therefore, car insurance is going to take a hit. But after this pandemic, I think that car insurance will continue to pick up as people resume their insurance policies. The next stock on this list here is Beyond Meat. So looking at Beyond Meat, there's a few things that this chart can tell us. Beyond Meat took a huge tumble here in October, and this might have been because of the whole thing with Very Good Food Company. I'm not too sure. However, we can see that Beyond Meat has found some support at the $120 level. The reason why I think there's support here, if we just take a look at the chart, you can see it's bounced off this support line quite a few times, right around here, 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 right here, and right here. So if Beyond Meat comes back to the $125 level, I would consider loading the boat on the stock. Right now though, I think there's quite a bit of resistance at this 100-day moving average, as well as just at this line right here. We can see that there's quite a bit of trading action happening here. So we can see in the past, we've seen resistance here. We've also seen resistance here, as well as we're seeing a lot of resistance right now at the $140 mark. If we cross above that though, I think that's good signs for Beyond Meat, and Beyond Meat will probably end up taking or going for a run, probably up to the next resistance level at 165. And if it passes that, we're going to retest the all-time highs of around $200 per share. So that's what I see going forward for Beyond Meat. And right now, I think it's possibly a decent entry point into it, just because it's been trading range bound, and the stock is a future essentially for meat, plant-based meats that is. I think that right now the stock market has sold off Beyond Meat and really lost track of its vision. But I think the vision is fairly sound with Tattoo Chef picking up right now, the Very Good Food Company, as well as a few other plant-based companies out there. The valuation is not cheap. However, I think the technicals kind of play well right now in terms of an entry. The next stock we're going to look at is Pltr. And there's a very clear pattern forming here, which is a wedge pattern. So you can see this pattern that I've drawn here. It's bounced off this wedge 1, 2, 3, 4, and 5 times. And we're nearing into this $28 mark. If we look at the bid and asks after hours, we can see there's quite a bit of selling pressure at $29. But if we cross that, I think that the sky's kind of the limit. Well, not really, but let's just draw the Fibonacci extension just to see what happened. So if we go from here to here and assume that it bounces off here, we can look at the Fibonacci extension. So we can see that Pltr could end up being a $42 stock at the 61% level or a $51 stock at the 100% level. So I think those are the price targets I have for Pltr here. But in the short term, this wedge pattern is fairly convincing. We had strong volume up to the tip of this wedge, and it's been declining since then. So I think Pltr is going to make a big move either to the upside or the downside, likely to the upside because it's going to continue this uptrend. The last stock on this list is Salesforce. And the reason why I'm interested in Salesforce is if you just look at the chart, Salesforce has actually dropped quite a bit from its previous all-time highs of 282 all the way down to about 231 today. And we can see that there's a nice support line here as it bounced off with this candle here, as well as previously its all-time highs were around here before it took off after an earnings report. So now that we've come back down to fill this gap, which is usually a good thing, we can see that the stock has slowly moved upwards from here. I think that we may be crossing this point here, which we saw as a support line before. So if Salesforce crosses above the 230 line, I think I'll be looking to make an entry into this position, maybe a short-term or a long-term options play. I don't know if I want to actually purchase the stock just because I'm a little bit strapped on USD right now. So I think an options play might be my best bet. I think that this options play will probably be a short-term options play, somewhere around 3 to 6 months, with a price target between 240 and 250. I think that it could easily cross back up to the 260 to 270 level, especially because most of tech is doing well, and Salesforce is one of the anomalies. So these are the 7 stocks that I'm looking out for on the US exchange. Are you guys watching any of these stocks? Do you own any of them? Are you looking to sell out of them? Let me know your thoughts in the comments down below. As always, smash the thumbs up button, click the subscribe and the notification bell if you're new here, and I'll see you guys in my next one.